Teach you how to protect your wealth. You can now ask our experts directly. Email us your money and portfolio questions, and we'll answer them in a Protect Your Wealth half-hour special on Friday, April 3rd.
Squawk Box on a Thursday morning, Asia side. May front month oil is up 51 cents, 5.328 a barrel. It's up about a sharp 1% or so in trade overnight, though. Prices slumped by 2% and more. A lot of that was down to the latest inventory numbers out. Jonathan Cornefeld is Director Asia at Hudson Capital Energy and Energy Consultancy. He joins us live on set here at our Asia headquarters. Jonathan, good morning. Great to see you. Let's talk through the inventory numbers. On the crude side, the highest levels we've seen in about 15 years. But offsetting that, though, a sharpish fall over at Cushing.
Yeah, you know, there was a bit of a two-way thing here. You saw the inventories now at their highest level since 1993, build of about 3.3 million barrels. But at the same time, traders saw that there was a draw from Cushing of about maybe 2.5 million barrels. So that kind of held the market up for the short time. As trading went on throughout the day in New York yesterday, we really saw the market come off, though. And we're still holding above $50. We've been above $50 in WTI for about 5 days now.
5 days now.
5 days now, yeah. And the longer we hold above 50, I think the weaker the retracement is going to be if we break below 50. But I think there's going to be some pressure on that $50 level. There's a lot of bearish data out there right now. And if you look at the fundamentals, supply and demand, we should be trading below $50 right now. It's just that the market is trading more as a proxy for maybe hope in the global economy right now, which is why we're above 50.
Yeah, I was just going to ask you exactly how oil has been reacting to the Obama administration's efforts to save the U.S. and therefore save the world in terms of their the Fed's intervention, buying paper at the long end, also the Treasury's detox plan. Right. And the other thing is, I mean, data out of the U.S. recently, especially on the housing side, has been looking a little bit more promising.
Right. Yeah, there's a lot there. And as I said, the WTI market is trading more as a proxy for the global economy. And the U.S. comprises about 25% of world demand. So any sort of fiscal policy action or changing around inflating the money supply is going to have an effect on the price of crude oil. So right now you have the government taking great strides, really trying very hard to actually help the economy turn around. So that's going to help demand. That's going to drive up the crude price. At the same time, you're inflating the amount of currency that's out there. That's also going to inflate the price of any dollar-denominated commodities such as crude oil. Right, so you have those two factors right now holding the price up. On the other side, the demand of gasoline has ticked up lately in the last couple of weeks. And last month, actually, we've seen that, not a huge tick up, but that's another thing that has kind of pushed the market higher. The demand is still not firm enough that demand in and of itself and the weaker supply we've seen from OPEC to have the market above 50. So it's really the fiscal policy actions. It's the fact that the dollar may be weakening in the medium to long term that has kind of pushed the market higher. And if you look at what's happened in the contango right now, and not the longer term contango, maybe just May, June, July, the next couple months, we've seen those months rally a lot more than the front month contract. And that makes a lot of sense because any dollar weakness is not going to happen tomorrow. It's going to happen in the next 6 months from now, 8 months from now, right? It's more of a longer term thing, right?
Yeah, understood. But how much is oil trading on dollar? How much is it trading more on? I mean, a lot of people think the correlation is a little bit tighter and closer with the euro. And you know, in just a couple of days, early April, we've got not just G20 happening in London, but also the ECB meeting, and they could take rates down to one even.
Right. Right now, it's economic factors that are driving. It's overall broad factors that are driving the crude price, and that's kind of sad because once it returns the fundamentals, then you're going to see a sharp price move, and you're going to see volatility really return. And I think what we're going to have is a move lower. It really depends on once the data is digested and people figure out when is the dollar really going to weaken. If we see a strengthening in the dollar in the next couple of weeks, then you're going to see the crude price really come off strong.
Okay, interesting. We'll be watching. Jonathan, great to talk to you, sir. Thanks for the time and the talk. Jonathan Cornefeld on set at our Asia headquarters, Director Asia at Hudson Capital Energy and Energy Consultancy. Straight ahead, it is the battle of the hybrids. Honda pitting its cheaper